All right. Good evening, guys. Ken at Tortoise Capital, November 28th, Sunday night. So we've got some trade frames to look at for tomorrow. I think yesterday's podcast that discussed scenarios for tomorrow's open and then really what to look at for the week ahead, I think was foundational, very fundamental. I may just pull that piece out and make that a separate video, but the first probably 20 or 30 minutes of that I thought was really good, particularly for a new trader that's, looking to get on board with the systems at the peak of what feels like a little bit of chaos coming to us. Although I do have to say, Jamie is crushing it right now with a Bitcoin trade that's already strongly recovering, and I'm enjoying the Ethereum move right now. So there's that. For those of you at home, this is a options trading course that Danny Ben Yair put together for us. He's a graduate of the Super Trader program at the Tharp Institute. He's been a pro money manager for over 20 years, a hedge fund manager now. He did all the programming for the TC2000 bundle. And because he uses options every day, he built an options course that is tied directly to our strategies for swing trading and a little bit of our hybrid trading. And it's ideally geared towards our strategies. Like a lot of times you'll see options courses that talk about generic strategies and whatnot, but these are tied directly to the swing trade systems and strategies that we teach. And he also shows how to use that in conjunction with the TC2000 bundle, and it is magnificent work. We're offering a discount on those for a bundle. Luis, I'm sorry, maybe I didn't put it on the index. I'll get it there shortly. I thought I had posted it there. Stand by. Yeah, if you look on the index for November. Oh, doggone it. I thought you're all right. I thought I had that on there. Shoot, I was looking right at it. I saw Fridays and thought that's the one I had. Just stand by while I get that done. It's too important to wait. Okay, so we're back. It's back on the it's on the index. Sorry about that. Let's see. So EWC. Okay, we're just going to load up the case studies for tonight. All right. Let's jump into it. Sorry for the delay. It feels stupid. Let's check the sound real quick. Sound check. All right. So, all right. So first we're looking at AMRK, AMARK Precious Metals. So we're right in the middle of this consolidation zone with one strong urge up. there was a hint of a cotta 2 trying to happen, but it failed. And it held here strong. So is that really a cotta 2? Kind of not really, because this is a lower high, or I mean a lower low, I should say. But then compared to this one, it's a higher low. I'm going to treat it as such. This looks like a bit of a front run to me on the daily, because it's not fully through the dragon yet. The PSAR flip is here. On the other hand, if you look at pure price, and it's had one nice move already, I'm inclined to like this, especially if there's going to be a flight to quality tomorrow in defensive plays. Here's the cotta 2's easier to see on the hourly, and I guess I don't mind that. Yeah, I think that's all right. With a quick target up here about 75.5. You're risking about $1, maybe $2. 1, 2, 3. That feels all right. Then the breakdown is pretty obvious. You get one short from here. You have to see it clear through 68 before you put a second position on. And then if that falls through 65, that's where your third position would be. I would wait to see above 75.5 before I got a second position on. Mostly because I don't know these guys. All right, next, natural gas. Well, energy has just been a rocket sled here. Was as high as 22. Peak statistical price of 20. Peak of the dragon at about 18.5. Trying to find support in here around 16 with a strong finish. I don't know. 18 is a stretch. I mean, that's the first move. That's about 55 cents. And then it's got to get through that. And then it's going to start picking up all this congestion right in here with maybe an upside of 19.25. So that's $1.80. And you're risking about 50 cents. I don't really like that one. I feel like the easier move is already done. Like this feels like strong support for all these reasons. And here was another breakout. It had one run and then fell back immediately. So I only see really about 55 cents on this one. Maybe if you had a tighter stop for execution, I could see that. I don't know. I think there's better choices out there than that one. I'm not really a fan of that. JP Morgan. The big sell-off has already occurred on the weekly, locked into this. That's kind of a gap, and that was a quick move. Yeah, look at that gap. Bang. But the last time it gapped to here, it went rocketing up. So if there was like some plunge protection team action tomorrow to calm the markets, then you could see how the financial sector, especially the big banks, would benefit from that. So you're looking to get long at about 163 with, I guess I'd have a stop here. I don't think you got to go that far. I think you go here. And that's about $2.50. 1, 2 to 167. Yeah, I think so. I think it's a single position till it gets above 169. And then you're targeting 173. If it can get through this 169 level, that's where your second position should go. And then the failure is immediate and fails to 154 right away. I actually like the downside on that better. All right, this is Bitwise 10 crypto. Strong support, higher high or higher lows. Going to try to break through 50. Yeah, so there's your Kata 2 has already formed on the daily. And I think from what I saw over the weekend, the cryptos are doing okay already. So I think this one is likely to go. I think so. When you see a gap up on this thing, as long as it gaps under 55, I think you could buy the gap anywhere in this range. If it's going to be that big, I don't think it's a 10% gap, but I think this is going to be fine. I think people are going to look at that as a buy on dip, just as you've noted. It's holding support right where it's supposed to. That looks good on the upside to me. Pfizer just running amok here. Free and clear on the above the Z3 excursion on the weekly. The daily had a nice big gap up. The only problematic piece here is that this was a little doji. Is it a morning star doji or an evening star, where it's gonna, fail out of that and come back to 51 and then test 50? Sure, that could happen. So I'd have a second position short there, a third position short on the PSAR flip, and then you think it's going to 48. But this looks like pretty strong support here at 50. Combination of that, what once was resistance will now be support. So I think, that's what the, from 54 to 50 is the downside. The upside, though, is unlimited, and a new, the precedent is already established for a lot of government money going to be thrown at big pharma for handling this new variant, and they've already conditioned us to throw unlimited money at big pharma. So I really like this as a hybrid frog style. You're just playing a breakout from here, and there's a strong argument for a big move in either direction in short periods of time. So that is the perfect definition of a critical state. If you ever wanted to know what one looks like, take a snapshot of that one. I mean, you're only talking about a 50-cent risk box there. Next up, CRMD. Boy, has come all the way down to test support here at 230. Wow, blew right through that one too. So that's sort of the last gasp. And twice the buying pressure has been enormous. I mean, doggone, that's 240 to 290. That's $50 on a base price of 240. That's a 20% gain in 8 days. Whew. So we'll see. I think it's strong case in either direction. Another critical state. I think if you get this price here, I think I'd hit. Yeah, that's a pretty good stop right there. That's about $8 of risk, and you're looking at a gain to 270. It's really, once it gets above here, there's a gap inside here that'll go pretty fast. So I'd play like one position to here, and then if it blasts through there, that's about where I'd add a second position, because you'll have about 1.5 hours in hand and ready to go. DoorDash. boy, I saw some really adverse advertising against DoorDash and all the delivery services from a consortium of small business, restaurant owners who are saying all of their margins are getting absorbed by the delivery services, and that's costing restaurants money to the point where Domino's is even buying gift cards for other restaurants if you will go there and pick up the food or eat the food there as a way to protest against outrageous delivery service prices. So dog eat dog world there. All right, so we have a critical state formed at the bottom of the stack. This is one I think could fail big time and come running all the way down to 160. That seems like the more realistic move to me. But if you do get the breakout, it should be able to get into the middle of this around 210 on a weekly basis. So 210 is right about here on the daily. That's the Bollinger Band mean. So that's just a reversion to the Bollinger Band mean, and that's $12 plus 10. So that's a total of $22 of potential gain versus about a $5 risk. So that's like a 4-to-1 to the upside. And then the downside is immediately obvious how good that can be. That's 5-to-1. So that looks like a good one. I'd make that one a high priority, Ken. I think I think you're in great shape on that one. Lemonade Financial Services. There's your collapsing dragon. From 80 to 50, that's minus 37%. Ooh, that's what a collapsing dragon feels like. That's why you want to be on the right side of that one. But the RL10 has made the turn, getting ready to cross the baby dragon, which makes this thing poised for a tactical move to the PSAR dot around 61, which is like $9. And you're risking a little over 3. Oh, no, I'm sorry. It's here. So you're risking 2. So that's 4-to-1. And you got a Kata 2 formation in here. Perfect. Perfect. And then the failure is easy because now this is $3 to the downside on about $1 risk. So it's 3-to-1 on the downside. Nice. Good find. Dutch Brothers. Consumer Cyclic. Ooh. Daily and 30-minute. There's your crossing the baby dragon, entering the dragon, crossing the spine, exiting the dragon. That's your RLXD. This one was like, that's essentially a collapsing dragon also, where it tried to roll up and it couldn't, and it just collapsed. I consider that a collapsing dragon. That's leg 2. So if you count this as leg 1, and that's leg 2, and now it's finding support, perfectly postured for a recovery or a failure. That's another just classic example of a critical state. So even though it's had these rising lows, there have been serious sell-offs. So I don't mind you having a strong support down here at 52. Another part of me wants to say, if you traded this short term, you could have a stop right here and have twice the position size. So if it broke out, and then you could quickly jump that to no lose, then, your targets to the upside look like here, here, and here. And I think I would be looking for a second position if it breaks past the Z3 line. So this is about where I'd get a second position at about 57. And then the downside is easy to see also. So if this collapses, it's going to come back to 43, which is about an $8 move. So that's a good find. US Steel, this should be rocking tomorrow. The great big run up on the daily from the supported spring crossing peaked at a lower high, which makes this a collapsing dragon. Couldn't hold and then fell even lower. So yeah, I mean, the argument on this one is that you're looking for this kind of a move tomorrow up to 26 and some change. So that's like $1.50 of upside gain. Maybe $1.75. And you're looking at 27, maybe a 50-cent risk. So that's about a 3-to-1 to the upside. And then the downside is easy to see because that's not much support at 23. So if this collapses here, it's going to come back to 22. Yeah, so this looks like another great critical state. Good find. One of our great traders here. And now Brazil, support, about 5 or 6 weeks of support that have held. And it's tried once to make that run up to 32. So that I would say that because this didn't hold, that I think the calibrated upside is about 30.50. So you're really looking at about $1 to the upside and 50-cent risk to the downside. That's 2-to-1. And then if it gets above here, don't lose money on that one. But this is about where you could add a second position. I might even wait to see it get above 31. But I just think the third world's suffering right now. The internationals are suffering because of this variant, and I think they're likely to get hurt more. KH asked me here, how do you choose between CLF, X, Nucor, and Alcoa? I'm kind of tepid on Nucor. It has not been as volatile. I like Cliff because it trades so nicely. It's a small cap, or I'm sorry, like a mid cap, and it doesn't take as much money to move that around as it does US Steel and Alcoa. So Cliff is inherently more volatile, which makes me prefer it. Plus, it's been a meme stock. There have been some that younger generation has been pushing it around. So especially on rebounds, I tend to watch that one carefully. But I would look at them. I would put them all in a stack like this on your bar on the side. I'd have them all lined up: CLF, X, Alcoa, and maybe Nucor if you liked. You could even, I know you've been looking at TX as well. That's almost the order in which I would take them, except maybe I might have TX higher than Nucor. This one, just because it's at such a critical level, and Cliff, just because it's such a great intraday trader. And I would just wait to see which one of them has the biggest percent move right off the bat. Danny has a filter on that in TC 2000 about finding the biggest movers, and find out, take a quick comparison about where they are inside on their 10-day NDX. So see where they are in their 10-day range. So like if and I don't know where they are, but if CLF was down here and getting ready to make a move, but US Steel was even lower, I would take the one that is closest to its extreme as the one that is more likely to fail or to recover big. So just take a look at their relative 10 NDX, and well, this is the last one. So maybe we just do that right now. So CLF is in daily winter. US Steel is in daily fall. So US Steel is already a little better. So Cliff experienced a great big sell-off, but then a nice recovery on Friday already. So that's good tactically. US Steel, same thing, only a bigger fall, and it's right near the top of it. I would go with I don't know how you prefer one or the other on the basis of their setup. I think both of them are in great shape. Alcoa, not as much of a sell-off, and is already like in the middle of its 10-day, and it's already inside the river and close to the Bollinger Band mean. So that feels fully priced. And let's see, TX. TX had a huge recovery on Friday already, and it's lower in its 10-day range. So TX looks actually pretty good to me. Let me come back to CLF. This looks more like it held support where it was supposed to, and it's already making a recovery. And you're looking at it to get to 23 pretty nicely. Yeah, and US Steel. It's a crapshoot between them. I just wait and see, like the way you see me do this on the by coming to the percent change, excuse me. I might, let's see, TX was the strongest. It only lost 0.8.
These are pills.
US Steel
Okay.
lost
I won't give them to her again.
All right.
0.4. Yeah, I think it's a toss-up. I think you just wait and see which one gaps up stronger and go hybrid frog with them. I concentrate on US Steel and Cliff right now, to be honest. Okay. All right, that's everything I got for you. Let's go ahead and get this published and posted. Take good care.